Hey everyone, welcome to the Real Estate Investing War Room Live. This is where we help investors learn how to retire faster through real estate investing and learn all the tips and tricks about how to do it properly. There's a lot of people who make it look easy, but there are a lot of difficulties in investing in real estate, and it's not easy. So we uncover all the secrets through the back door here. So I'm going to talk today about a couple things. It's the end of the year here in 2023. We're in December. So I just sent out an email on our newsletter of how our portfolio performed as an entire package this year. I put everything out in the open. We don't keep any secrets. We want people to be informed and let them know that we're up to. So I'm going to cover that today. But before I get into that, next week, we're having a special guest. Court Shaft with Nexus Private Capital is going to come on live to answer your questions about what it's like to do hard money loans, hard money investing. And he actually runs a fund where you can invest with him and help them give out hard money loans, and he pays a good return. So we'll get into all of that next week when we interview Court right here live. So come prepared at 6 p.m. Central. He'll be available to answer any of your comments live as we do this. So I'll jump into what we're going to talk about today is our portfolio. And, there's a few other topics I've seen on the news lately, and we'll kind of cover those in a little bit here. So I'll just start by sharing my screen. That's my favorite thing to do because it gives you guys access to all the information that I can see and that we can kind of talk about this. So this was the email that I recently sent out. If you're not on our email list, normally you click this button here, but basically it's Top Producer Investment Capital /newsletter. topproducerinvestmentcapital.com/newsletter. You can sign up and then you'll be on our newsletter list and you'll get all of these updates as we go through. I try to send them out, at least quarterly, if not monthly. So this is our first property, Harmony Village in Gonzales. This property we had bought in April 22 for $1.7 million. We spent about $400,000 on the renovations, and recently we had the property valued for $2.9 million. And the reason that it goes up in value this much, obviously we do some construction, but it's mostly based on the net operating income of the property. So in the prior 12 months, the previous ownership had net operating income of $67,000. In the first full year of taking it over, well, I guess we're, about 18, 19 months of ownership now, but the past 12, we've gotten it up to $184,000. We have tripled the amount of net operating income on this one. Part of it is because there were just a lot of expenses that as soon as we stopped those expenses that previous ownership was doing, the income shot up quite a bit. But we also were able to raise rents quite a bit as well. So this is probably our flagship best property here that's performing. And so, yeah, this one's here a great deal. Next, we've got Starlight Horizon in Canyon Lake. This one's 13 short-term rental units, a nice boutique hotel we've got out there in Canyon Lake. This one has had a bit of a slower start than I would like. We've had some operational challenges being all the way out in Canyon Lake. Because these are large renovations and construction, getting crews all the way out there has been difficult. And then also because of the seasonality of an operational need of a short-term rental boutique hotel, there's a lot more operational staff that comes into that. So we bought this one for $1.9 million in September of 22. We spent about $1.2, $1.3 million on renovations so far. We bought it. The net operating income was about $76,000. We're trending about the same this year because we're still getting the pool going, and the short-term rental stay is very difficult to make money on when half the property has been under construction all year. The net operating income did not raise this year, but we do expect now that the property's finished with construction, we're really honing in on the marketing now. We're going to get that net operating income. I mean, I'm optimistic. I think it'll be on the higher side, $300,000, but we do expect somewhere between $150,000 and $300,000 on this year. Obviously it depends on what happens with the economy. The lake in Canyon Lake is a little low. That does affect all of those. So if anybody is looking for a nice place to stay over the holidays, we do have fire pits and we do have a beautiful pool out there once it gets a little warmer out there. So feel free to book a stay with us. I'll give you guys a discount code. If you book on our website, Investor50, you'll actually get a nice discount code there. And you guys can come and stay with us, check it out, leave us a nice review. Okay, next let's talk about San Antonio. We've got our Nexus Urban Living property. This is 75 units. We bought this one in November of last year, just a little over a year ago, for $6.85 million. We've spent a little over $400,000 on renovations. Our original budget was $600,000, so we're actually under. our total renovation budget for that one. And when we bought it, the original net operating income was $239,000. Interestingly enough about this one, that net operating income isn't too bad because the existing owner was spending very little on repairs and maintenance. Plus, when we bought it, the insurance went up quite a bit and the taxes went up quite a bit. So, on our first year of operation, we had a lot of vacancy and we had a lot of evictions that we were going through. And so, our income wasn't as high as we'd like this first year because of all the. But after you get all those bad apples out of the property and then you just have good tenants and you have the construction done, income does seem to go up quite a bit more. So we were on track for right about the same, 237,000 this year of net operating income. But here's how you can kind of tell the difference is our average rent has gone up. It was $894 and currently we're getting $1,028. And that was as of just a couple of days ago when I pulled this. And so you can see quite a bit of growth here. And then every month, the net operating income has trended up. So it's just one of those things where, you know, the income was lower in the beginning of the year, but it's been higher now. So if that trend continues this following year in 2024, we should see that go quite up a bit. And that's what I talk about here. If we follow that trend line forward in 2024, we should be at 480,000. So these are big jumps. Again, a lot of this portfolio we just bought, you know, within the last, 12 to 18 months. It takes about 1 or 2 years to get these renovated and stabilized. And, we're not losing money, but again, we'd love to see these numbers get a little higher, a little faster if we can. Some things are under control and, some things are just outside of our control, like market conditions. So next, let's talk about Legends on Story Lane. This is a 12-unit property that we bought in Dallas. We just got a phenomenal deal on the price on this one. And then we also bought it where it was operating at a loss. So anything that's operating at a loss doesn't take much it took a lot of work, but getting it profitable and positive is, any improvement over running at a loss. So we bought this for $850,000. So far, we spent $275 on renovations. They recently we have had a broker give us a value about $1.8 million. So you can see that's, roughly, what is that? We got $675,000 of increase just there. And then the net operating income was at a $26,000 loss. And then we had boosted that up to net operating income of $77,000. Same thing as these other properties this year, like we're quite positive now. And as long as we follow that trend line, it should be even more positive the following year. Okay. So next we've got Iconic at Round Rock. These properties actually I got to hold off on talking about, but just know that more is to come later on those. Okay. So if anybody has any questions on those, kind of put those in the comments. It's been a long year, and I will say that, let me stop sharing my screen here. Okay. So it's been a long year in the sense that a lot of our excitement has been on operational intensity and just making all of these properties very profitable. So when we are working on these properties and, when we're out there and buying in acquisitions mode, I should say, we underwrite a lot, we analyze a lot, we review them. But then once we bring something in-house, it's a lot of work to get them up and running, get them stabilized. And as much as we'd love to continue buying and continue raising money to have more investors come into these deals, we'll always look and see what's out there when good opportunities are brought to us. But focusing our attention on making them profitable and operating them well is really where our focus is. Because if you can buy something but not operate it well, you might lose money on it. But if you only buy one deal a year and then you really focus on that deal, that deal is going to do better. So we are very aware of not stretching ourselves too thin. That, that first year we came into 5 properties. Now I'm operationally involved in 4 of those, and we really, put our heart and soul into maxing them out. And so just about all of them, I'd say we're still finishing out the Starlight Horizon, but all the other properties are finished with all our construction renovations. We're just, watching the trend line for the income go up over time. And then as Starlight Horizon gets booked, we'll kind of see this next year will be a interesting year to see what happens in the marketplace and what happens with bookings and just how strong our marketing comes through. Okay. So in other news outside of just year-end portfolio performance, there was a news article that came out about the Fed cutting interest rates. Let me see if I can find that on the screen here again. Okay, I'll close this out. Okay, so at least for today, they're holding rates steady, but they do indicate that there are going to be 3 cuts coming in 2024. This bodes really well for us as real estate investors, just because rates have been high for a while. It's putting a lot of strain on the economy, and if you bought something at a 7% interest rate and then the Fed cuts it, we're going to see a lot of activity and a lot of refinancing happening in the next year. So I could see this as interesting. There's a lot of real estate investors that are in very difficult positions. Their properties have these adjustable rate mortgages that are very high, and the rates are very high, and their payments are very high, and they're losing money right now. And it's tough to sell because the value of their property is down. So the Fed is coming in here. It's going to cut them a break, and they're not going to be in as much turmoil. But there's also, I'm seeing just a lot of pent up demand where there's a lot of other investors that are out there waiting on the sidelines. They're making offers on these properties. I've seen, we recently bid on one out in Fort Worth, and there was, I want to say there was 35 other offers on the property, just because there's just not that many properties being sold right now. And so when one does come up on the market for sale, everyone's been waiting for an opportunity. And then they make an offer and say, hey, it might be a low offer, but there's still a lot of people. So as soon as either sellers, if the seller has to sell to someone, they'll pick the highest and best offer out of those 30. But as soon as interest rates come down just a little bit to where it makes sense for a seller to sell, I think we're going to see a lot of inventory coming back on the market, because it's going to allow buyers to be able to offer higher prices. If you buy a $3 million building and your interest rate is 6%, you might save $100,000 a year. And if you are buying it at a 5% interest rate instead. So that's a big gap. And if you have that extra $100,000 difference, you can pay an additional amount, like get it up to like 3.5 million to have it be that same cash flow positive. So that's, I think, what we're going to see in the market this coming year. It alleviates some financial distress, but it also allows a lot of buyers to come back on the market and be more competitive in their bidding. And it also allows sellers to be happier about the prices that they're going to get. So let's see what happens in the next year. Other than that, I think that's all I got for you guys today. Again, tune in next week at this time at 6 o'clock. We're interviewing Court about private money investing in hard money loans. So he's going to be a great interview. We'll be here on for a full hour, addressing your comments, questions that come up. So stay tuned. I'll see you guys next week.